So if you think of Ethereum as a relatively low supply cryptocurrency, and each one of these use cases is pulling crypto out of the market. The more of these things get built, the scarcer Ethereum is. So currently, because of the staking I talked about, because of the explosion of NFTs, because they're now locked onto an Ethereum on the blockchain, and because of the explosion of DeFi and other things that are going on, there's only 11% of all available Ethereum available to purchase. 11%. So that's basically $30 billion. It's a $300 billion protocol or whatever it is today. A $300 billion protocol. So it's $30 billion. So Elon Musk could go in, take all the Ethereum out of the market. We know what happens in supply and demand terms. But what's going on is exponential demand from NFTs, DeFi, everybody's coming on, new investors, and the supply keeps shrinking every day. It only means price explosion, an exponential price explosion. That's the most likely outcome. Now, I'm not giving investment advice, but I'm giving what my view is. And my view is, and where my money is that this ends up with dramatic upside. So that's Bitcoin. But Bitcoin, because it's so secure and so amazingly built, makes it less fast for transactions. So then back in about 2015, Ethereum came out. And Ethereum solved two things. One, making it faster. And two, adding something called smart contracts. Smart contracts allow you to program the bit of the blockchain to say a specific thing. If this, then what? Those kind of things. Which meant that suddenly you could program this blockchain and create all sorts of things. And that kind of grew for a while. And then we all had the crypto winter, the bear market in 2018 and 19. And then suddenly out of the gate exploded DeFi, NFTs, social tokens, all of these things being built on smart contracts on Ethereum. And the network effect on Ethereum was gigantic because it was growing really fast. So think of Ethereum more as a software platform for the internet of value, and think of Bitcoin as the pristine collateral, the base layer of it all, right? So you've now got users who do nothing but put money into the network and spread the network to get more people in it. What makes a network really take off is when there are applications. So if you think of Ethereum, we had the investors, then we had stuff like decentralized finance, hundreds of protocols, businesses all being built. Then there's NFTs all being built. So now you've got use cases, projects, people are using it for transfer payments, all sorts of things. So now you've got these users who are the investors in the network, who are securing the network, and now you've got people building other applications on the network. And so if you think of Facebook, if Facebook was just you and I being able to chat on Instagram or whatever it is, valuable. What's really valuable is when all of the brands and advertising businesses built on top. Or you build communities on top like we've all built on YouTube, right? You're basically helping the YouTube network. Now, in the case of YouTube, Google gets all the money. You get some of the advertising revenue. But in the case of crypto, you all participate, including these businesses who have built on it.
So what makes that possible with something like Ethereum and not Dogecoin? Is that the blockchain behind it?
It's the vibrancy of the developer community and the blockchain behind it, and the more brains that accumulate in one place, the more it becomes like a supermassive black hole and accumulates more people. So Doge, the people who built Doge did it as a joke, but it was a decent enough blockchain, but not great. And it wasn't great because it wasn't as robust, and it wasn't as decentralized, and a number of things. And the developers stopped working on it, so it never got improved, never changed. Now, Bitcoin doesn't need to change because it's kind of, yes, there's been a couple of changes over time, but generally speaking, it's very static. Ethereum's much more dynamic, but Doge was nothing, it was abandoned. So there were no developers working on it. Now, the original team have got together again, because I think Elon Musk is backing them to start building on it again, to start changing the attributes of that. Okay, this is starting to get interesting. I own some Doge for this reason. I saw that network of people, and I saw that it had no real use case, it's still speculation, Then I saw people accepting it for payments and realizing that this is a community of Dogecoin owners who kind of know it's a joke, but also know it's serious. And then you start to see, okay, they're going to start building stuff on top. It's interesting to own now. The really important thing about risk is to set up yourself to take risk. So you either have nothing, then take as much risk as you want, or you build up an asset base, you own your house, you have an income, so you can cover your cost of living, and then your excess savings, you can then risk if you want to, because you can always make it back over time via your investments and you're not going to lose your house. So setting yourself up for risk taking takes time. It comes later in life, but you suddenly occasionally get an opportunity like this. Now, this is the biggest I've ever seen, but it does come across from time to time where you can swing the bat and take the big bet. So psychologically, well, it's been sideways correcting actually, pretty much. Ethereum and Bitcoin reached their peak between March and May this year. So that means it's been correcting and storing up power for potentially the next move higher. So it's not a bad time to just put the money in. If you decide you've got a couple of grand you want to put in, now's a good enough time as any. Then dollar cost average. So then start averaging in a bit of your paycheck and put it in to crypto. So then when it does sell off, you're buying. So you'll keep adding into the weakness and into the strength, and over time that strategy will work well if you're looking at a long-term point of view. I think it's probably a bit late to wait for a large correction because we just had one, which was a 50% correction over the early summer. So that was the time to really deploy into a correction. So I don't think you've got that opportunity. Sure, could we fall 20% and you could cheekily add some more? Fine. Use your dollar cost averaging for that. But I'd be of the opinion that it's been correcting for so long and traded sideways for so long. It's a pretty good time.